And what do you expect to happen from this point going forward?
Right. Well, of course, gold surge has been capped like usual, but the cartel is on their last legs. I think the entire world realizes that they went into the Brexit with an all-time high naked short position in both gold and silver, and they certainly weren't expecting it to happen. So undoubtedly, when we find out on Friday of where their naked short position was as of today, it's going to make it even more clear that the emperor has no clothes. And then you throw in, of course, the actual fundamentals of exploding demand. In fact, yesterday was one of Miles Franklin's busiest days ever, and we've been around for 27 years. And the fact that now production is going to be dead for years, and there's almost no inventories left. So you throw in the Brexit, and that's kind of, to me, the catalyst. That's the end game for the gold cartel, and hopefully it'll be later this year, if not sooner. As far as the stock markets, yeah, that was a more true reaction to what's going on, because you can bet the cartel, the powers that be, were in there doing everything they can to staunch it. From the $399 billion that the ECB lent out in their long-term refinancing agreements with European banks on Friday, which, by the way, is just about the amount of TARP that was used in 2008. And they did it all in one day. And what did it get them? Absolutely nothing. To the Bank of England, quote, committing $345 billion to stabilize markets. In other words, printing $345 billion or 13% of GDP. And they probably did even more than that. And what has that gotten them? The Great Britain pound, as I sit here today, is at it may be at its all-time low, if not something in the 30 or 40-year range of lows. So again, the world is falling apart. I wrote this morning about what the Bank of Italy, there is no Bank of Italy anymore, what the government of Italy wants to do, because their bank stocks fell 25 to 30% in the last 2 days alone to all-time lows. They don't even have the authority to bail out their banks. So they want to go around the ECB rules of bail-ins. Remember, the rule of ECB of the land now is you must bail in your citizens. So what they want to do is they want to issue a bond outside of the bail-in and outside of the ECB rules that the ECB can monetize so that they can give it to the banks. I mean, we're talking about everyone sitting there watching these people and like, you guys are serious, right? You really think that this is going to help or be credible? So I think, to me, that this is just day one, day two of what's going to be a 1,000-day game to 1,000 days, 3 years. I really think that this is the catalyst for the end game of the fiat currency regime.
So do you think with the other countries looking at, a referendum, because we know other countries are saying, something, maybe we should follow the UK. Do you think this will break up the EU, or do you think the EU, the central bank, will fight back somehow?
Oh, they can fight back all they want, but yes, the EU is toast. The EU died yesterday. In fact, the ECB died yesterday. Or Friday. It all died. And the reason that back in the middle of May, I wrote an article called "The Most Important and Precious Metal Bullish Election in History" was this very reason. Because I knew unequivocally that if they voted to leave, that everyone else would leave. And the reason being, because the EU has been one of the most destructive political entities of all time. I read yesterday, the Kremlin, they were talking about the breakup of the EU being like the breakup of the Soviet Union. And from a political perspective, it's pretty darn close. From an economic perspective, it will be at least as bad, because back then the level of debt in the world wasn't even a blip on the screen compared to today. So we're going to see massive defaults, whether or not, no matter what the pace of the breakup of the European Union is. But as you mentioned, all of these countries are lining up because there's so many angry people out there that just want change. They want out. The French, it's a guarantee that Marine Le Pen is going to win now and get France out. It's a guarantee that Spain is after these elections this week that we just had this weekend, is going to push further and further in that direction. And of course, Italy, 55% of the population wants a referendum. Then there's other ones, Finland and Hungary, you name it. Everyone wants out, as they should want out, and the ramifications are catastrophic. I mean, just from the simplest perspective, aside from the fact that all of the global currencies have crashed to essentially all-time lows or close to them just in the last 2 days alone, and this is continuing a trend that's been going on. I mean, that alone is enough to create economic dislocation and political and social unrest. But you could simply look at what's the near-term economic impact. Remember, we were already at the worst global economy of our lifetimes before this happened, with the most debt of our lifetimes before this happened. Europe is going to ground to a complete halt. And as if it wasn't doing bad enough as it is, it's been flatlining with GDP for years and years now. Now it's going to go dramatically negative, kind of like what happened to Greece after, just before or after its bailouts a couple of years ago. We're going to talk about major negative growth in an area with massive debts, and the debts are all intertwined to each other, as evidenced by the action of the bank stocks, which are all entwined by these derivatives. And, it was only 2 weeks ago that I wrote, the Lehman of Europe, Deutsche Bank, is about to implode because Deutsche Bank is the biggest of all the derivatives purveyors in Europe, and there's plenty of others right behind it. So I think the bank sector is telling you exactly what's coming. The European Union is dead. I don't care I don't think anyone will be saying otherwise. The European Union is dead, dead, dead. And you're going to see a period of years, if not a generation of political strife and infighting, trying to figure out what the new Europe is going to look like.
You mentioned that the economy was already doing poorly, and we spoke about this many, many times. But what's very interesting, I noticed the corporate media and many of different officials were blaming what is happening on what the people did. Like, the global economy right now is failing because the people in the UK decided to vote out of the EU, and this is why this is happening. And for many people, they do believe this. They believe that because of this, this is why the economy is failing. But the economy has been failing much, much longer than before this even happened.
Well, you just gave me the perfect softball question, Dave, because I woke up very early this morning because I have many podcasts to do to write my article. And the article was called Brexit, the ultimate money printing scapegoat is already being capitalized. And in fact, it was written specifically about what I just mentioned about Italy. And the point is, well, you say that many people believe it. I don't think many people believe it. I think the central banks believe it's a great way to propagandize what's going on, as I characterized with Janet Yellen. It's manna from heaven because she can now finally have an excuse, that built-in excuse not to raise rates, for the rest of her tenure, which, by the way, is going to last until Trump takes over, because after Friday, Trump won. I mean, Hillary Clinton might as well go home because Trump is part of the anti-establishment that Brexit has unleashed upon the earth. So everyone's going to be swept out. But as for, the excuse, yeah, I mean, it's the perfect excuse. It's not going to help, though, this time around. That's the thing. I remember before the Brexit vote, someone was telling me, I was on a podcast, and they said, yeah, but the powers that be, they'll do whatever it takes to make the vote go their way. And I said, yeah, the problem is, though, that whatever it takes doesn't work anymore. I mean, Mario Draghi said this 4 years ago, and Europe's falling apart. That's why we are where we are. And sure enough, the vote did not go their way. And they could say all they want about how they could blame Brexit all they want. But the point is, it doesn't make anything better. All it's going to make them do is print more money. And I see this morning, they say the rally, and it's a meager rally. I mean, like European stocks are 2.5% after being down, 12 or 13% in the last 2 days. And they say it's because Mario Draghi had a speech and he said we should all work together in coordinated fashion, to get through this. So they're saying, well, that means it's going to be a global coordinated response. No, it doesn't. It's just a dead cat bounce. What coordinated response? I mean, can you imagine if, let's say, we have what I call a Sunday night special, where they all meet on Sunday and they come out with some pronouncement Sunday like they used to do during 2008 about Lehman or Fannie Mae or whatever, and said, yes, we have all decided we're going to cut rates even further, and we're going to launch a massive QE campaign like no one's ever seen before to rescue the markets. You know what would happen? Gold would probably go up $200 and markets would crash. So again, it doesn't help them at all. Right now, credibility for central banks is dead. It's not dying. It's completely dead. And that's why it's particularly dangerous, the situation we're in right now, because there is absolutely, utterly nothing they can do. And the more they say of what they're going to do, the more it's going to catalyze things falling at this point. Because at this point, there is no one on the planet who believes that a new QE scheme or negative interest rates is going to make anything better.
What happens with the U.S.? Are these countries and investors, are they going to be pouring into the dollar? Are they going to boost the U.S. economy? Because we know the U.S. economy, it's like dead in the water. I mean, we're seeing more and more indicators that we are even past the recession point. I mean, we're heading into a depression area here. And I know U.S. Treasury Secretary Jack Lew, he's saying, yeah, there are headwinds ahead, but there's absolutely nothing to worry about. The U.S. economy is strong, and we can handle all of this.
Well, was he saying this before or after the Brexit?
After.
After. So he's calling this a headwind.
Yes.
And this is considering an economy which has essentially had zero growth by their own manipulated goose estimates for the last 2 quarters before the Brexit, and the numbers since have only gotten worse. And as I just was talking about in Europe, this event alone is a giant grinding of a halt of whatever activity in the world is going on. He knows that. I mean, what is he, crazy? He worked on Wall Street. Look at what's going on in the stock market. It kills consumer sentiment. And look at the currency markets. It kills trade. Now you have political issues about who can trade with who and who wants to trade with who. So no. And as far boosting the U.S. economy or the capital flows that come into the dollar, and I've said this all along for all those people who have said the dollar is going to crash. No, the dollar will be the last to go. The dollar is the reserve currency still, not that because it's so superior, just because it's more liquid, it's more out there. People use it as reserves more. So what is happening is what's been happening throughout this entire crisis, first in 2008 and now for the last 2 or 3 years. Money is flooding out of less liquid currencies into the dollar, and it's going to continue to do so, which is only going to make the U.S. economy weaker because we already have a dying manufacturing sector. So it's only going to make it worse. Plus, as I said, there's the global trade is grinding to a halt. So nothing is going to improve. All it means is that the hyperinflation that central banks are going to unveil on the world in response will be at a more muted pace here than it is everywhere else. But it's not going to really help the average person who already has a skyrocketing cost of living and now is going to see a massive recession. Remember, according to the government, we haven't had a recession in like 7 or 8 years. It's like the second longest, quote, expansion in U.S. history, and it's the worst expansion. I mean, to me, it's an expansion that equates to a recession. So, of course, we have to go into recession anyway, and now there's nothing they could do. What are they going to say? Well, if we go to negative interest rates, we'll avoid a recession? No, right now is the end game for the U.S., and they are going to, A, be announcing a recession shortly, and B, and I have my title of my article written for that day, Ding Dong, the Fed is dead. When the Fed, probably sometime this year, and if they can't control markets, sometime this summer, is forced to cut rates and launch QE4.
So you think moving towards later part of this year, all this talk about interest rates, pushing them up, that's pretty much done?
No, that died. That died on June, whatever the day was. I mean, to me, it died earlier this year. Because I said all along that they would never raise rates. I mean, I couldn't have been more vehement to say that they would never raise rates again. And after that gambit that they played in May, where they didn't even say they were going to raise rates. That's a whole ridiculous thing. They said they were considering it, as they always consider it, after the economy gets better, which of course it didn't. And really, that was just the gambit to try to get gold down. That's how the commercials had got their all-time naked short positions. They got stuck in, and they figured, well, let's try this one more gambit. We'll pretend the Fed's going to raise rates. We'll smash gold while they're saying it. We'll see if we can cover it. But they couldn't cover their shorts. As it turns out, there's so much competition to buy right now that they didn't cover anything on the way down. And now you have the Brexit. So that even bigger, more egregious, obvious, blatant naked shorts for the whole world. And then, of course, the Fed actually had their meeting where they not only didn't raise rates, they pretty much said things are so bad, we're not going to do anything ever again this year. And then you have the Brexit on top of that. So, no, the whole raising rates things, to me, it died, early this year. But to the world, it died in June. And now look at the money market predictions. The odds are, the odds of a rate cut are now much higher than the odds of a rate rise. And frankly, to me, the only thing that's going to decide when they cut rates is how fast, their ability to control through other manipulation this crash. I mean, if you see another, week or two of this kind of action in the financial markets, and I'm not just talking about stocks, I'm talking about currencies and commodities, not to mention the news that comes out about, the chaos that's going on in Europe. then they'll have to do it right now. I mean, I believe, to me, the odds are that the Fed's going to have to cut rates back to zero or even below this summer, and potentially in July if things get out of control too quickly.
So you also mentioned QE4. Now, if they start creating this currency out of thin air once again, we know all the other QEs, they really didn't do anything for the economy. They blew up a lot of bubbles and they helped banks. But if they start doing this, isn't the entire country, the world, going to look at this and say, okay, all the others didn't work. Why is this going to help right now?
Well, that's what we were just talking about before.
Yeah.
I said, and I was talking about on a global basis because that was giving the more extreme example of like they all get together and say, we're going to all do this together. But I mean, obviously, if it doesn't work on a cumulative basis, it's not going to work on a singular basis. And again, I mean, I can guarantee, I mean, I'm guaranteeing it right here for everybody. If the Fed, I mean, again, it's hard to put this, things don't happen in a vacuum because, I can't say what the circumstances are that occurs during. I mean, let's say you literally have a 20% type market crash. That's different from just kind of a modest crash, or maybe there's a political event, all these things. But generally speaking, if the Fed announces QE4 this year, my prediction is it does absolutely nothing. Yeah, I mean, maybe for a day or two or a week, it gives some support, but the markets will go right back down, and then they'll really take off because everyone will realize, wow, this truly is over. I mean, they got nothing left. Where are we going to put our money? Well, we're going to put it in gold. We're going to put it in silver. We're going to put it in Bitcoin. We'll put it in anything that we can protect ourselves from what these central banks are about to do, what they've always done throughout history, but never have had to do on a cumulative basis where every currency in the world was backed by nothing except government promises and historic debt.
So where does Puerto Rico fall into this? Because we know July 1st, they're going to default. And we know that I think there's legislation that's passed through the House, but the Senate is sitting on it right now. And if they don't give them any type of bailout, is this another black swan?
Well, it's not a black swan.
Yeah, I guess
now it's been put on the back burner. I mean, again, it's manna from heaven from them because no one really cares about them. In fact, they could scream we're defaulting and no one will be listening. Because that's only, $70 billion of debt, which, by the way, the U.S. citizens will have to eventually pay because Puerto Rico is a, quote, U.S. territory. But that's another story. No, I mean, to them, it's good news because no one's going to care. I mean, their credit rating will go to zero and they'll never be able to borrow again. And they'll become far more destitute than they've ever been before. But the actual bond default will become, the 1,000th item of news because it's so small compared to, I mean, we're talking about the whole European bank system's about to default. Deutsche Bank is about to go bankrupt, et cetera. Whole nations are going to default. So yes, Puerto Rico will default. I mean, that was guaranteed before all this happened. Now it's guaranteed to happen because I don't think anyone's even going to listen. They're not even going to bother trying to avoid it with all that's going on in the world.
So at what point do you think that gold is really going to start to take off? I mean, we've seen part of it where people aren't going to be able to get into it at all. I mean, there's going to be a point where gold is going to surge so rapidly that people just will not be able to get it. When do you think that point will be?
I think it's this year. I mean, I've been very clear from the beginning of this year. I've said when I saw how the year started, I said, and I saw what was going on. The quote I've been using is, I don't believe we will get through 2016. I don't think we can get through 2016 without a catastrophic financial event. And I wasn't particularly thinking of Brexit. I was just saying I could see that this is where the world is going. But now that I see how things have played out in the gold market, but particularly with what's going on in the COMEX. I mean, my article maybe 2 weekends ago was called "Finally, the long-awaited commercial signal failure," meaning when the commercials, the cartel, i.e., are beaten, are broken by all the surging demand is upon us, or it's nigh. I said because I saw that they've been taking that their all-time high gold and silver naked short positions. They had taken them to record levels before all this Brexit had started, and this whole thing in May to get prices down didn't work. So they found themselves trapped. They are so terrified that they took out these huge all-time high positions with prices just $1,200 and $17 for silver, because they see how close we are to the surge into real money. And now they're in really big trouble because those positions are even bigger. And now you have the Brexit and you have record high demand around the world. And now, because of all the collapse of currencies that happened just in the last 2 days alone, prices of gold have gone to all-time highs everywhere. I mean, just yesterday, Mexican pesos, the price went to an all-time high. Australian dollars, Canada's almost there. British pound is almost there. Euro is almost there. The rupee, it's almost there. Remember, rupee, the biggest gold buying population in the world, they notice when the price of gold in Indian rupees goes to an all-time high. And of course, the Chinese devaluation, they had their biggest daily devaluation since the big August cataclysm of last year, and they're going to take their currency down even further. So I think right now, we had a major shortage in the retail bullion industry. I mean, major silver shortage last summer, and we've had them in 2008, 11, 13. But last summer was particularly crazy. It was probably our busiest summer ever at Miles Franklin. There wasn't even a crisis. So I truly, with all my heart, believe that we're going to have a shortage starting with silver sometime this summer as the crisis unfolds. And I believe that the days of the cartel are very, very numbered. It really, I mean, look, we've said this before, but, I've got 14 years experience watching this stuff, and everything that I've seen and everything that I've seen and learned and everything that's going on now tells me that there's just no way that they're going to be able to stave off the forces of economic mother nature and the precious metal markets, throughout this crisis.
Andy, thank you very much for being on the X22 Report Spotlight. Once again, how can people see your work?
Right. Remember, Miles Franklin, we are one of the oldest bullion dealers in America. I've been around 27 years, not a single customer complaint. I write every day for free at milesfranklin.com. You can email me at ahoffman@milesfranklin.com or call us at 800-822-8080.
Andy, thank you very much.
You're welcome.